Okay, guys, what's going on? Today it is Thursday, the 13th of January. It was a great day today for trading. Thank God. This week I had to learn some lessons in the beginning of the week. I was a little sloppy, but today came in clutch, so that's good. So let's just start it out quick. I guess I can go over a little bit of the Telegram first, just so you guys can see. Again, if you're not subscribed, I say this every video, but if you're not subscribed and you want to check it out, go ahead. Where did we start today? Right here. So basically, was anticipating that this was going to be the major move of the day. You can see previous days of this week, we had a 3 a.m. Sweep at 3 a.m., sweeping Asian highs, then reverse. 3 a.m. sweep of Asian lows, then reverse. Sweep of 3 a.m. Asian highs, and then reverse. We had equal lows too at Asian lows. So that was also something that I was looking at. Additionally, you can see there we have our accumulation, we had our manipulation. So I was anticipating a distribution down a little bit lower than what we actually got today. And then I showed a trade in London here. That was a potential, right? I don't trade London typically unless I'm up for some reason. But this is what the opportunity was here. You can see a nice sweep on liquidity, mitigation of that POI, came back down, created all this liquidity that induced this point of interest, the extreme point of interest. And then that's your target right there, that weak low. Okay, so that would have been, again, I would have been aiming lower as well on this one, but that would have been my first major take profit right there. Anyways, then this was the expectation. I thought that we were going to get up to the 800 level. Actually, that was my target. And you'll see right here when I draw it out. Yeah, so I put it right there. I said, I want to see it get up to the 1400 level or 14800. We'll go over this right now. And yeah, just a bunch of stuff in here. You can see, I said we're at an important level at an important time. All attention on the charts right now. And this was literally the anticipation of what I wanted to see happen, that right there. And what ended up happening was exactly that, right? So we got a nice sell there, took it down. So, yep, that's it. Then again, for London close, I said I don't trade London close because I'm an absolute muppet when it comes to trading London close. So I just don't do it anymore. But I was like, yeah, this one looks pretty good for a London close setup. And basically, there was the entry on that one. I took it on demo. You can see it went down, and you can see it's actually continuing. Actually, well, you can't see it from here, but we'll jump into it. So if you haven't subscribed, definitely check that out because that's going along throughout the day, live throughout the day. So you can check that out if you want. Don't feel obligated, but it's just a resource there. It's mainly for me, so I can track and log all my stuff and go look back at it later on and see how far I've come and all that. So, but if you want to join the journey, then feel free to, please. If I help, that's again, it's incredible. I'm really, really grateful if that's the case. So what do we know? Obviously, we reviewed in the last videos, so I'm just not going to keep going over it, but essentially that this was the higher time frame level here, right? We bounce off of it, we create a low up to a higher low, higher high, higher low, and then finally that push up to fill up some of this imbalance here. So last night, I just marked out this level right here. You see this little hidden base there. So I marked out that because essentially what we had was we had this essentially inducing this level. So we have to make sure that we keep an eye on this level first. And then the next area will be obviously this imbalance up here and then this fill. Okay. So this was how it looked at the beginning of the day. And again, what I was thinking was that we have a very clean leg here. And this, obviously this might not close like that, right? We have to be aware of that. It's only Thursday. Friday could literally close and the candle could be bearish for all we know, right? We just don't know. But right now we're starting to see a potential area of inefficiency right here. And so this was the kind of release point, or it actually wasn't right there, but this is going to be the order block. The release point was essentially right here, right? This is where the open of the candle was. Obviously price went down first, and then capital was injected or liquidity was injected into the market, and that essentially drove price to where it was right here. So that's just the theory, that we have a bunch of space to the downside to come down. We also have some upside space as well. So we just have to be eyeing around these levels, right? Don't just jump in, but we have to eye around these levels. So again, oh yeah, also one thing I wanted to know here, that this is a weekly high, right? I don't mean a weak high. I mean a week a weekly high, like the time frame weekly high. And the reason why that's important is because, well, at least one of my strategies that I like to use, and I'll give it out a quick overview right now, so then you can go and test it if you want. And yeah, if you want to go and test it, I won't give out all the little tidbits, but I'll let you go practice this yourself. So essentially what I do is I wait for a significant high or low, right? So that's going to be a daily, a weekly, monthly level, or it can be sessions, but the daily, weekly, monthly are going to be the better ones. So one of my strategies is essentially this, is that you get some sort of consolidation or whatever, and then you get an inefficient run above liquidity, right? Into this liquidity. So essentially what that means is that this ran inefficiently into an area where there's going to be opposing liquidity. So it's very easy for this move to come back down here, essentially. Like, I don't want to explain it too much in detail because, again, it's my strategy, and I developed it over the years. So maybe later, maybe another day, but not right now. But anyways, that's the whole gist of it. Okay, is that we run into significant liquidity. So I always mark out the points in liquidity, and you can see here on the daily that I marked out this weekly high. Now, what's interesting about this weekly high is that we have an imbalance right there. And then what do we have right here? Another hidden base. So now, just as this high, or these highs, series of highs right here, was inducing this hidden base, which is actually an order block on the daily, this weekly high and this order block on the daily is inducing this imbalance and this hidden order block. Okay, so that's where I ended up refining my level 2 when I woke up today, because originally it was right here. And so we'll just leave it marked out, actually, that this order block and I actually marked out the 500 level right here, because I like to round them down to the big figures, because they're important. So anyways, you can see on the daily, this is a huge imbalance, right? If I just mark this out in the FEG, this is a huge imbalance. So this could very well be, after sweeping a weekly high, the level that we come back down to and target the next, basically where the liquidity was pumped from. And you can see that ultimately we had these series of down close candles, the struggle to get over it. As soon as it gets over it, boom, we get this a massive run. So it's very, very likely that it's going to come right back into here. And look what lines up perfectly here. We have this hidden base right here that lines up beautifully with that last down close candle, this order block right here. And so there's just a lot of confluence down at the 13800s big figure. So that's probably where price is going to be gravitated towards, in my opinion, especially after sweeping weekly highs and daily highs and stuff like that. So that was the theory. That was the idea going back into it. Obviously, you don't just jump in. You wait for lower time frame confirmation and everything. But you can see here, at the same time, what else do we have here? We had a previous day high here. And again, remember, like I said, so we have a previous week high, previous day high. Look at this. We have a fractal of what we just saw in the weekly. We see an inefficient move like this come up into a point where there's going to be counterparty liquidity, which is going to be up in here, right? And we do it inefficiently. So it's very, very likely that we're at least going to come back down and to close this level off, right? Close this imbalance off, which was down here. But given the daily cycle, you'll see why I still believe that this is coming down to here, and I still have actually part of my position running in case that is what's going to happen. So that was basically it for that. I don't really think I need to explain anything else there. Look at that, 50% of this imbalance too, by the way, is another hidden base. So you can see that these things are super important. They're all over the place. And you can see what they are on lower time frames, right? They're just lower time frame order blocks. That's why it's called a hidden order block, but it's just on the higher time frames. And something I like about this one is that you're probably going to get a reaction here if it does come down there, just because this is induced by these equal lows, which are also Asian equal lows. And yeah, so anyways, we'll go down to the hourly here. Yeah, not much on the hourly. Again, very clean. You can see very blocky candles. So this is where the market actually, or where the injection of liquidity came into the market, right? What is that? 114,387. And so if this is going to continue up, right? If this is going to continue up, it's probably going to feed somewhere back down into here anyways first, even sweep it a little bit before it goes up, just because that's where the order was. That was the massive order that caused this large move. And if not, if it can't sustain and it breaks through, then this will be likely turning into that breaker block for continued downside like that in the future. And then this right here is actually would be a beautiful sell model, right? Again, I told you guys about this in a couple videos already, but if I just imagine that this was the buy, there's a buy side of the curve right here and the sell side of the curve. Okay, so here's the buy side where we have this base here, we move up inefficiently, base here, up inefficiently, base here, and now we break down. Now, what we're anticipating on the sell side of the curve is something roughly equivalent to this. So a break below, a structure that's similar to this, break back down, a structure that's similar to this around here, right? So if we get this, then we know that we can start looking for sells in and around these levels, especially now it's paired up with the breaker block and everything like that. And that would really validate this. And we have some equal lows here as well that we'll probably get a run on that liquidity as well. But that's probably why if price does break down, we're going to get a bounce here. It's going to be in a corrective form, very similar to that. And then we're going to get that down there. And then from there, we'll reassess because, again, this could just be all one big correction before one big downside that goes right down to sweep these lows, or it's going to just bounce off here and continue up like that. Two options. But again, no point in forecasting it. We'll just wait and see how it starts playing out and how it starts lining up. So yeah, but you can see the fractal, one of my fractal setups is forming right here in the larger setup. So what the hell is this? What did I put here? Oh yeah, that was where price was, where I was anticipating price to get up to. So this is what happened, right? At yesterday, where we got up here, we mitigated that level that I wanted to see a reaction at. But then look what happens, right? You just get this consolidation. That's not indicative of a reversal. And so what we have to be aware of is that, okay, this is potentially not going to hold. And then what ended up happening, let me just go down to the 1 minute from here and we'll start off analyzing the day. And let me just take off, was it this one here? Yeah, it was. This right here. So we see what happens in Asia. Okay, so first of all, we see consolidation, break up, kind of consolidation. We see a consolidation here. We see a sweep right there, and we see a move back down. So now we broke this structure. So it's very likely that this low is gonna get run, right? That's gonna be the weak low. Just because this is consolidation, sweep, break. So any retracement is probably gonna come and take out this low. That's what I would be anticipating at least. And then what happens here is you actually have a fractal of what just happened there, right? You have a consolidation, you have a breakup, you have this inducing these equal lows. What happens? Break back down. Look what happens here. You have inducement to this point of interest, right? And that's what happens in Asia, right at the end of Asia. And then you get a break, or sorry, a sweep, a break, and then you get this move right back up into where this wick, right? And 50% of that wick is going to be probably a good area where there's likely to be on a smaller time frame. So in this case, on the seconds time frame, there's likely to be some order block or some imbalance that got filled. And that's why I call these like a wick imbalance. And so you can see that it gets right up to like about that 50%. And then we see that fall right back down. Where does it go though? It goes, what I would have anticipated was that it goes actually lower. Specifically, I thought that these lows would have been taken out for sure because of the Asian equal lows. But what would have changed it was this. You see this order block here, it got mitigated. And in very close proximity, oh, actually on the other broker, it didn't get mitigated. This one already mitigated it. Anyways, what ended up happening though, is you have a consolidation, you have a sweep, you have a break of structure, and you have a move right back down to the origin. So that was a potential setup in early London. Yeah, early London, that would be right, 2 a.m. 1 to 2 is Frankfurt. We left relatively equal highs here, equal lows there. This one would have been a tough one to call, admittedly. Like for me, I don't know if I would have taken that personally. But potentially because we broke 5 minute structure actually right here, then I would have taken it. Yeah, that would have given me the confidence that now that we had a sweep on this liquidity. Yeah, once we had a sweep on this liquidity, and again, if this is the sell model here, then there's a potential that we get right up to this extreme point before coming back down like that. So potentially, yeah, you could have taken that right there, just with that right on that order block. And then that would have yielded a significant response. Like that was a massive trade from early London. And again, where does that target? Right up in our highs, right up in the what's it called? Right up into that hidden base that we had locked up here, right? So that being said, let's go down to the 1 minute again, and we can see here, look what happened as soon as we hit off that hidden base. I mean, it's just really beautiful. We have a sweep of 1 minute structure right here. We have, you can say that this is actually the break of structure right here. Okay. You can say that this is an inducement. You can say that these are inducements, and then you honestly could have just taken it right from here. This imbalance, whatever, right? If you just want to, if you don't want to be greedy, if you don't want to be greedy and you want to just take it above the imbalance, or sorry, above the inducements right here, you could easily have taken that and you could have made, again, just a significant amount just off of that, right? Just off of that run. What ends up happening though is you look at the higher time frame structure, which in this case is 5 minute. This was a 5 minute break in structure. After a 5 minute, yeah, well, I don't want to call it a sweep because it wasn't really a sweep. Sweeps are typically, or what I like to see, sweeps in like 1 or 2 candles, something like, watch if I go up to the, let's go 2 minute. Yeah, you can see this. This is what I like to see as a sweep. You have 1 candle and then immediate consumption, right? See how this one, you had a consolidation, then you had 1 candle, and then it consolidates above one, then it goes up like that. That's not a sweep to me. This is just a break in 5 minute structure. So if you go to the 5 minute, you'll see right here. Okay, so this was the break in structure right there. Again, now where are your inducements? We know that we have a smaller time frame story level right here that didn't get fully filled. So you have to be aware of that, right? You have to be aware of that this could be your POI right there. And so now you didn't get fully induced. That inducement right here to get this move, to get this high right here was only necessary to bring price back down to below this low. Then it accumulated orders, right? There was liquidity resting here, of course, because you can see 1 purge, immediate consumption. You can see a nice V-shaped recovery like that. So you know that there's liquidity resting here. We break structure like this. Again, where's your inducement? Right here, right? It induces it, grabs price, and then rips back up. Okay, and then you break structure right here. Again, you sweep, break structure. Where's the inducement? Right here. Here's that breaker block right there, and then it goes up. So that leads to the break. So you literally could have just been, if you were like one of those, if you're one of the scalper guys, there were a bunch of opportunities here. You could have taken breaker block right here. You could have taken breaker block right here. All of them fit the inducement kind of theory algorithm there, where you can just take it right below the inducement. There's a point of interest. You're anticipating upside to take out this inducement. And then again, look what happened here, right? It mitigates here. Then you have a break of structure right here. So if you were too hesitant to take this one here, or you didn't want to, that didn't follow your rules completely, you wait for the reaction, the breakdown. You can see break of structure. Where's your fill is right here, right? And that's also perfectly in line with the order block right there. And you can see that's why we got that reaction out of that. So if you didn't want to take this one right here, like that, and target the weak low, which is going to be right here, then what you could have done is you could have taken this and out of, again, put my stop just above here. Okay. And again, same target there, 6R. So you could have done that as well. All right. So that being said, let's go over what happened in New York today, because New York was a goodie. Well, it was actually super boring in the beginning. So as soon as it started coming down here, what did we start doing? We started basically accumulating orders, right? Orders were just building, liquidity building right above this level. And you can see it just took so long for price. It just stayed in here for so long. But essentially how you could have traded this, if you're a scalper or whatever, then you could have scalped out to take out this London high. As soon as you start to see these equal lows and you start to see it develop like this, okay, no worries. See, I actually anticipated price to get down to here first, down to this one. And it didn't get down there. And I was looking for longs if it got down to there. The reason being is because, first of all, this was induced like that. So I saw that it came really close to it. So close proximity. Additionally, this was the level that broke through the previous day high. So this is the level that caused the break of significant liquidity. You can see this is really where the orders came from. And you can see actually later why price reacted right here, right? So we have Asian high right here, we have previous day high, and we have a block where significant orders came into the market that led to this move up. But anyways, so that's what I was anticipating first, was to see it get down to there, or at least get down to the previous day high. It front run them both. Why did it front run them? Well, because there was a little hidden base right there, right? Little hidden base that it supported right there. So these things are super powerful, these price pauses. So just be aware of them. But anyways, what ends up happening is you have a 1 minute break of structure right here, right? 1 minute break of structure right here. If I go up to the 5 minute, do we have a 5 minute break in structure? Yes, sir, we do. See a 5 minute break in structure right here. So this is the main one. As soon as you start to see that, and you start to see these equal highs accumulating, you can start to really be like, okay, I'm anticipating longs. And again, one of the places that I was looking was this low right here. It got induced right here. And so I was like, oh, potentially that's going to be a good one. But then also at the same time, I realized we were in the breaker block right here. And again, we didn't really break through, right? We closed above it. We swept it, came back up, and then we broke structure. So this one could have been the one that you took, right? Maybe this one you were looking for lower prices. There was no inducement, no nothing. So I wouldn't have taken this anyways. But as soon as this break structure up here, you see 1, 2, and then you have your inducement right here, just like that, into point of interest right here. So this is the one I was super tempted on taking today, but I'm like, nah, like, you know, I don't want to scalp, because that's essentially what it was. You'd have to be targeting, first target would be right here, obviously above these equal highs. And then additionally up to here, which again, it could have been a good trade actually in hindsight, but maybe it was just too soft at the time to pull trigger on it, which is fine. It's all good. Good thing to journal, but this was a great trade, good setup in my opinion. You know, if you take that, you know, good for you, that it's a good one. But this is the main move I was anticipating, because Asian lows was equal lows and the whole structure of how everything was developing. I was really, really anticipating Asian lows to get tagged today, during the day today. So as soon as I saw this here, and I said it in the group, I said that it front run 14,800 big figure here. And the problem that I have with that is that usually when institutions do that, when they deliver price in such a manner, right in front of a big figure, they're essentially trying to build liquidity, or they are building liquidity to interact or make transactions at that big figure, right? Because institutions will transact at those big figures. When they're putting in big orders, it won't typically be at, you know, 14, 7, 6, 2, 1, whatever. No, it's going to be, okay, like let's do our transaction at 14,800s, right? And so boom, that's where they get it. So that's why they build up this liquidity around here. So that's what was kind of making me believe that we were going to get up above these London highs. Additionally, what ended up happening was New York Stock Exchange opens at 9:30, and you can see 9:30 sweeps always, just so classic. And so what ends up happening was, what happens? We consolidate before, New York Stock Exchange opens, boom, we get this rally to the upside. Additionally, we mitigate off of that, that 800 level, the 4,800 level. And look what happens here. We have a sweep on structure, break, break. So we have multiple sweeps on structure, by the way, right? We have a sweep of London high, which is a significant high. We did it inefficiently. Again, we broke through that when we entered, so that's okay. But we broke structure. And you can see that this right here was a 15-minute break of structure, as well as a 5-minute break of structure. So I'm just gonna draw that out like that. And you can see we swept liquidity like this. And then additionally, we had our 1-minute break in structure right here. Okay. So as soon as that happened, that's when I said in the group, let me just pull it up. Where was it? Right here. So we're at an important level at an important time, all attention on the charts. The reason why it was an important time was because it was New York Stock Exchange open. We got that sweep. I wanted to see it break down, come back up, and then we could enter a position there. You can see this S&R liquidity right here, the support and resistance liquidity. I wanted to target that. That was the first zone targeting into the previous day high and Asian highs. That was where I was going to take off a majority of my position. So right now I have 10% or 10% of the original position running, but majority was taken off there. So, and that was it, right? We broke down, we came back up. What do we have here? Well, we have our sweep candle here, right? This is the one that did the major sweep that mitigated the 800 level. And then look what happened here. We broke down and then we never mitigated it. We just left this little inducement. We left this little inducement. So that's why I actually entered right at the inducement. I actually entered a little bit before at 14,780 because I didn't want to risk it. Like, again, I could enter right at this zone or right at the rejection block right there. And that would have been a better entry, or you could have entered at 50% of the wick, right? That one wouldn't have got you filled. But again, for me, like I would just rather not be greedy. And I said, you know what? I'm just going to go 14,780, big figure there. And my stop was at 14,820. And so again, first level of interest that I wanted to see what would happen was right here. And immediately, as soon as you entered the trade, it went right back down here. So that's a 2R, but I didn't take anything out yet because I was super adamant on this running down to at least clear these. I thought that maybe there was a potential that we'd get a reaction right here because this was all inducing this level essentially, which was the last one that mitigated here. So this is where I took majority of my profit. I saw it coming down here. I took partials at where was it? I took partials. I think it was around right here, just a tiny bit, just to kind of ease my mind. And then I targeted here. This is where I took off about 50%. And then previous day high, and right here, actually, it was literally right at the 500s. Yeah, right at 500, I took off 90% of my position. So I just had 10% running. And that's how I ended off the day. So yeah, and that was basically it. Look at that. We mitigated Asian high, right? Mitigated Asian high, broke back above, used this order block right here. You can see the next as soon as we close above it, we mitigated in the next candle, and then we get this absolute rally to fill in some of this leg, fill in some of this leg. And something that's really interesting that I've noticed in my back testing, and maybe this will help you for support and resistance type zones or levels that actually work. It's stuff like this. You see how, let me draw it out first so you can see, and I'll just draw it out simplified, because I've noticed this and I mark them out all the time when they're in line with like smart money concept levels. So essentially what it is this, okay? You have this break here, but see how this one breaks, but it doesn't respect it and it actually goes deeper into the level. Well, when it breaks back down again, this low is usually the one that's the good support and resistance level. And if there's something on this in this leg that lines up with it, it usually works out pretty damn well, and it targets this low. And so that's why I suggested, like, that's why I posted to you guys in the Telegram group, essentially, that I was like, oh, like, I'm not a betting man, but if I were to go short, like if I were to go short from what's it called, on EU, it would be right from here. Like I'm looking at potentially it going down right from here. And then that's where I said, let me see, where I said that this one would go down from, right? Like this is what I was back testing, right? You can see it. I marked it off there. It tested to the pip. I see 1, 2, 3 drives up. It mitigates this. So this is where people are probably likely going to be buying from. And then it starts consolidating. So I'm just like, I'll enter. I entered right at the top there on my demo, and I said I'm going to target this inducement here, and you'll see right here. You can see because we had that sweep on liquidity and then break up. This was the inducement at the SNR level right here, and so that's where that would be the first target. And let's see here. Let's see how it ended up playing out on the 1 minute. Again, just super slow. That's why I don't like London close though. By the way, you can see again. 1, 2, 3 runs. This is probably going to be used where people are going to be buying from it for trend following traders. I ended up looking at this order block right here. And so I entered right here, just like that. On demo, of course, right? On demo. And again, Why here? Because we broke structure right here. What's this? Right? That's support and resistance. Anybody that plays support and resistance will probably be looking at that level there. So that's where I'm going to be targeting, just below that low. That was the first portion of the trade. And then second portion, writing down, you can see these two blocky candles with, those are just equal lows, right? Those are just equal lows. And again, we have downside targets to go and achieve potentially, even if this goes up one more time. Like I think that the potential is that this goes up one more time like this, just to take out this high, and then it comes down like this. Because again, there's so much potential for downside for something like that. That's what I would want to see overall. And you can see here that the weekly opened right here, and you can see price went down, up. So this is a typical bullish weekly cycle. Thursday creates the high of the week. And so what I would be anticipating is a pullback, right? Because when you think about a weekly candle, again, all from ICT here, guys. So just reiterating what he teaches on his free channel. But say this is the open of the week right here. Okay. And then this is going to be the body of the week. This is going to be the full body here. Well, it's very likely that we're going to get some sort of wick, right? The body just doesn't close like that. Typically no wick. It's very unlikely that that happens. So what ends up happening is we get up here and then we create the wick of the week, which will likely happen Thursday being that high. So if you can imagine it, that this right here is going to be how the potential weekly candle closes here, right? A bullish candle. But what ended up happening was we created the wick here in the first couple days of the week, and then we created the high of the wick in the latter days of the week. And so that's essentially what I'm playing here. Is I'm playing the trade down of this week. Ideally, again, Monday there was a beautiful setup that I missed. Again, just not in the zone here earlier in the week, but that would have accounted for majority of the weekly range. And you can tell because right here we've moved 195 pips, which is a little bit more than usual for the average weekly range of euro US dollar. So now we have the weekly cycle that's lining up potential Thursday high of the day. We know we've exhausted our average weekly range. And so now we can be very confident that we're going to just be catching this wick here of the weekly range. So that's essentially what my logic was going into it. And you can see it played out today, caught, what was that, a 7R, obviously took profits along the way, but holding a bunch left in case this does want to drop down. And this will run for, 25R if that's the case, and just leave 10% on, just cash out with that. And then that's it. So yeah, that was basically it today. It was a fun day. It was a kind of boring. You can see it was just consolidation all throughout the day. It was just really at 9:30 at New York Stock Exchange and on, it started to get a little bit more interesting. So anyways, guys, I hope that was super valuable. Again, if you liked it and you want to be a part of the Telegram group, it's in the description of this video and all the other videos. Definitely go check it out and see what I'm thinking, and see all the mistakes that I make essentially during the day. And then, we review them here after and try and get better and better every day. And, that's it. That's all we can do. So, yeah, that's all I wanted to say, guys. I will catch you in the next video. Be safe and trade safe tomorrow, last day of the week. All right. Cheers, guys.